Hi, have you ever listened to bookkeepers and accountants talking and you are absolutely clueless on what they are saying? There are words that get thrown around all the time: financial statements, balance sheet, trial balance, equity. What the heck? And you're just a business owner who wants to run a business and make money. So let's unpack the jargon about accounting. 5 things about accounting you need to know, right? What we focus on: your assets, your liabilities, your expenses, your income, and your equity. Let's start with what are assets. Assets are what you can take and then sell it to get money. So you get your long-term and your short-term assets. Your long-term ones, it's your building. Then you get your short-term or your current assets. So when you look for money, that is what people are interested in, your current assets. It's your cash at hand. It's a current asset. It's anything that you can sell immediately to get money. So that is your current asset. So your inventory, your stock, that's the current asset because you can take it and sell it and make money. Your savings account. If you have an extra saving account, that's an asset. The cash in the bank, that's an asset, a current asset. Then let's look at your liabilities. Liabilities, it's your bond. It's your vehicle financing, right? It's your car and what you owe over the long term. It's like when you have a loan for like 3 or 4 years, that is a liability. It's what you owe to people, right? So, but in the long term, your credit card is also liability, but it's a current liability because you ideally you don't want to pay a credit card for the next 5 years, right? So now your assets are good. Liabilities can also be good, provided that you keep it under control. So those two, your assets and liabilities. Your assets must be more than your liabilities. You must have more than what you owe on the books. So then it means business is good. You are working at a profit. You are managing your money well. And not all businesses are in that state, but it's something that you can aspire to, right? So then you get your income. It's anything that you do in the business to make money, which is when you deliver a service, that's for part of an income. When you sell a product, that's how you make your income. Simple as that. And also within one business, there are many different streams of income. The key is when you have different streams of income and you have clients who pay you for different things, make a note, have a record where you say if you run an IT company, you say this is because I sold stock, then say stock. This is because I installed an antivirus. That's a service and you're selling stock. So have a clear distinction so that when the bookkeeper comes and do your books, they can say, oh, that goes there, this goes there, that goes there. And that's at the end of the day what you want to do, to be able to see where your income comes from and who is the biggest contributor to your business, right? Another thing, expenses. This is what kills most businesses because you will find someone has they make 1.2 million every month. And it sounds beautiful on paper. But when you come to the end of the bank statement of that month, that person is in a minus and it's a consistent pattern, which means your expenses are way more than your income. So how do you keep tabs on your expenses? The first thing, keep your slips. Don't assume that you will remember, because you won't. Whenever you sell something, or whenever you pay someone, or when you buy something that's business related, those falls under expenses. It's very easy when you think that you've made 1.2 million for the month, that you can just swipe, and you forget about what you're spending it on and how much. Then at the end of the month, you can't understand what the heck, I had 1.2 million, but I'm in the minus. The key, it's never, and I will say this again, the key, the problem, the challenge is not the income. You might think it's your income, it's not. The challenge is your spending. How do you spend your money? Because for you to keep tabs on your expenses, you need to be meticulous, deliberate, and you need to be focused. You won't be able to keep tabs on every single cent. That's unrealistic. But when it comes to certain things, to make sure that you have a record, when you have a slip, when you bought something or you paid someone, write it on in your books. Record it in your books. Don't wait till the end of the week, because then you will forget. Don't wait till the end of the month. It's even worse. Do it same day. Make it a habit. Habits are very difficult to adapt. But the thing is, once you have gotten used to it, you will find that it becomes automatic. So get in the habit of recording your expenses. So to recap, assets, liabilities, income, and expenses. The last one is equity. Equity is what you contribute to the business, what you make. Overall, your net worth, it's equity. So when you look at your business, right, how much of the transactions on your account, how much on your bank statement is actually money that you took out of the business for personal use? Those are drawings. They are not expenses. And drawings fall under equity. It's everything that you took out of the business for personal use. There's a big misunderstanding where people think I can swipe whenever, wherever, and it will be a business expense. It's not. It's drawings. A business expense is when you spend your money on stuff for the business. If you take your clients out for a lunch, that's a business expense. But if you go and party and swipe and you think it's a business expense, wake up. You are wasting the money of your business, of your company, and you will not grow. Equity is also the contributions you make to the company. If you donate a car to the company, if you donate equipment, and that is what we do, especially when you start off, right? The stuff that you buy and you use in your company, those are contributions and they form part of your equity. So those are the different categories that needs to be created when you have a bookkeeper. It is your assets, liabilities, income, expenses, and equities. And of course, each one of these accounts can be broken down into other smaller accounts. That's what we do. And that, in a nutshell, I hope, has broken down the jargon when it comes to accounting or to bookkeeping. But if you have any questions, of course, that's why we are here as your bookkeepers, to assist you with these services. But make sure, whatever bookkeeper you get, that you understand what you are getting into, what you are paying for, and understand the basic bookkeeping or accounting concepts. It will make a big difference to you.